Hello! In this video we're going to look at Excel Service Holdings, EXLS. Very interesting long-term chart and short-term chart. Long-term uptrend going on and the potential that it just broke out of a descending channel. This is a monthly chart going back to 2009. We'll get back to this in just a second, but let's look at some of the fundamental reasons why this stock is interesting. 33.6% yearly EPS growth versus the average growth in S&P 500 stocks over the last 5 years was 9.2% yearly EPS growth. So more than 3 times the growth in this stock that you'd see in a typical S&P 500 stock. S&P 500 stocks, of course, the biggest companies in the US. So if we're seeing bigger growth than what those guys are typically seeing, that's a really good indication that this company is growing. And we see analysts are predicting 15.5% expected yearly EPS growth per year over the next 5 years versus 8.6% per year for an S&P 500 average. How does this translate into long-term stock performance? 18.9% yearly return on average for EXLS versus 12.2% for the S&P 500. So that's based on a 10-year average. So this stock really outperforming the S&P 500 in terms of its returns as well. And that's driven in part by this strong earnings. So if a company is making more profit or growing more than average, you'd expect to see it making higher stock returns because people are more willing to invest in that company, which helps push the price up, and people are less willing to sell it, so it doesn't get sold off as much. Over the long term. In the short term, we're definitely going to have fluctuations, as we'll see on the chart. Another thing to look at is yearly sales growth, more than double what the S&P 500 is over the last 5 years. EXLS has averaged 13.5% per year versus 6.5% average sales growth for S&P 500 stocks. It also has a 2% buyback yield. It doesn't pay a dividend, but a buyback yield basically helps create shareholder value over the long term because the company is buying back shares, and that means fewer or profits are split between fewer shareholders. This stock, because it tends to grow and perform well, it usually doesn't trade cheaply in terms of PE. Over the last 5 years, it's ranged between 23.9 and 54.8. The current PE is 29.1, so definitely at the lower end of that range. And the forward PE, which looks at forward earnings, or expected earnings, is 18.8. So actually a pretty decent valuation for this stock. At first glance, a PE at 29 might seem a little high, but since it rarely trades below those valuations, something to consider, in the forward PE is fairly attractive for this type of growth. So this is the stock, the monthly chart, long-term uptrend, and I've drawn some lines in here. You can see just starting to break out of this descending channel after a pullback through most of 2023. Let's zoom into the daily chart. And we have this collection of highs that the price had been stuck below, and we broke out of that in December here. So before we were making these lower swing lows, lower swing highs. Now we've had a major higher swing high, downtrends created by lower swing lows, lower swing highs like we were seeing, and now that's no longer in play. We have the possibility of an uptrend emerging with this higher swing high. So uptrends create higher swing highs, higher swing lows. So this creates some options. Long-term investors may consider purchasing this stock here. If you're a little more price sensitive, may want to wait for a pullback. We don't know how big that pullback will be or when it will occur, but we'd want to see that bottom out above this prior low and then start turning up, that might be a good entry point, because then you have both factors for the uptrend. You have a higher swing high, which occurred here, and then you'd have the higher swing low. Until that pullback occurs, we don't know if we'll have the higher swing low. So, this is kind of an early indication that we're potentially entering this uptrend, or entering an uptrend, but not quite confirmed yet. But given the fundamentals as well, a pretty good stock to consider now that we have this potential turn in the trend coming out of this fairly extended pullback for this kind of stock. But as you saw in the monthly chart, long-term uptrend and starting to break out of this descending lows. For long-term investors, basically as long as it's an interesting hold, as long as the stock keeps producing these kind of strong earnings numbers and that expectations remain up. Expectations also play a big role in stock performance, because if we expect that it's not going to do well in the future, that's going to affect our decision now. We may not want to hold on to that stock. So we want expectations to remain elevated, well above what the S&P 500 averages are, and then that should generally translate into better stock performance. We don't know if the past will continue into the future. The expectations could change. Something could happen with the company where they don't perform as well. And you can see this stock, like any stock, has its ups and downs. So we always want to manage our risk. So before investing, make sure that you're not investing your entire portfolio in any single stock. You want to invest a portion of funds in different stocks, and also think about your exits and control your exits. Consider where you're going to get out, both to the upside and to the downside. If this doesn't do what you expect, where is your exit points? We want to control risk. If this is an uptrend, we shouldn't be dropping back below this swing low if we've started this ascent. So that would be one point to potentially consider a stop loss or an exit point, and then we'd reevaluate, look at the fundamentals, see if it still looks good. But you could also come up with your own exit points for this stock, but just fundamentally strong, and with this technical breakout, definitely an investment to consider looking at. So do your own due diligence before investing, but check it out if you're interested.